Let's kick off with what we can expect from those US non-farm payrolls. And again, are you expecting it to be a market-moving number?
No, I think we should. If yesterday's numbers were anything to come by, we should see those numbers being coming off. If we do, however, do not see a reduction in those payroll numbers, I think that will be quite negative for the market, and we should come off quite sharply this afternoon.
Alicia just pointing out that the local market down 1 1/3% at this stage ahead of the long weekend. Are we seeing relatively low volumes today?
We are seeing low volumes, but a lot of investors are coming in and taking profits with the expectation, following international markets lower, and no one really wants to keep a position over the long weekend. So you'll see a lot of covering this afternoon.
Where are you seeing value in the market at the moment across the sectors, and perhaps let's be sector specific here?
Well, in terms of sectors, I like BAT or BTI as a nice favorite stock. It's quite defensive. You see they came out with a nice dividend. I think Standard Bank has value, and as well as Sanlam longer term, purely because your Standard Bank and Sanlam would have gone through, hopefully, the worst of the storm, and going forward we should see your debt ratios coming down with the follow through on your interest rates, and that really should be positive for them in the future, in the next 6 to 12 months. So those are really my three value stocks I have.
There's been much debate in the local market at the moment as to whether the earnings momentum can justify the share prices that we're seeing. Of course, markets have run some 40% since March. Given what we've seen out on the local front to date, do you think that share prices are realistic?
Well, I think there's a lot of concern and a lot of fears that have come in. And I think, if we do see the downtrend continue, we could come down about 2,000 points, down to about 22,700 on the all share. And if one really looks at the PE ratios over the last 2 to 3 years, we hit a high at 18, we came all the way down to 8, and we're up at about 12.5. So looking forward, there is a bit of upside, but a lot more risk to the downside.
We've also got to focus on the Monetary Policy Committee, which will be will make a decision on local interest rates on the 13th of August. What are we looking for here? Are we going to see another 50 basis point cut in the repo rate, which currently stands at 7.5%?
Nedbank's consensus or view is that we're unlikely to see a cut now. We're likely to see a cut over the rest of the year of about 100 points, probably in October, November. And I think the MPC is really, wanting to see exactly what inflation does over the next 2 to 3 months before they cut any.
You don't think that the latest CPI number coming out at 6.9% is reason enough for the South African Reserve Bank to say, well, it's time to cut one more time, and perhaps at this juncture?
Well, the MPC has been quite adamant about CPI coming within that target between 3 and 5, and until we see those numbers coming in between 3 and 5, we're not going to see a cut for the rate.
Let's move over to the international front, and again, much speculation as to whether we are in for a double-dip recession. What is the Nedbank standpoint on that? Because obviously it'll have a follow-through to the markets, and we could see, as you were saying, stocks retracing.
Yeah, our house views that we are expecting a correction in the short term, but if one looks at the next 6 months, we could see upside if in terms of corporate earning numbers that they do fare better. We see corporate earning forecasts being increased. So if there is follow through on all of these forecasts and we achieve that, and employment numbers do get better, and we see job numbers coming, job losses numbers decreasing, in the next couple of months, we could see potential upside.
And then what do you make of the resource cycle at the moment? We have seen some volatility in those metal prices. Where do you think we are? Could we be in a sustainable bull trend where resources are concerned?
Sorry, Bronwyn.
I was just saying, in terms of resources and commodity prices, where do you feel we are on the commodity price front? We have seen some volatility, but all in all, those precious metal prices are holding up relatively well. Could we be in for bigger things on the commodity front from here?
I think if one looks at Brent spot has broken through the 2-month moving average. It looks like it's barreling all the way up to $80 a barrel. There is, however, some concern from the States in terms of inventory levels that, they are at their maximum, and, come as soon as the summer holidays start in the States, that those inventory levels are not going to be depleted as as fast as they seasonally are. So one, I think, should be quite cautious when looking at commodities. Looking for those good indicators, good economic data out, and until we do that, one should really be cautious going forward.